Hey Kim, how are you?
Good. How are you, Diane?
Good.
Welcome, everybody, to our May EAC. Looks like our attendee roll-in has picked up a little bit from the last couple of minutes, so I think we can go ahead and get started. A little bit of a time change for us. So welcome to our new 1 o'clock EAC. Hopefully everyone had an enjoyable lunch between CalPERS and us this afternoon. Nothing new in terms of format this month. So if you have any questions, obviously there's the raise your hand button like always. If you are calling in, we do have at least one right now call in attendee. So the email address to send questions is advisorycommittee@calstrs.com. All of the materials can be found by using your phone and scanning the QR code right there and going to that'll take you directly to the materials on our advisory committee section of our .com site. Or if you have that bookmarked, everything is there. So we have a pretty full agenda for you today. So I would like us just to go ahead and get started. Let's go ahead and go to the next slide. And there's our agenda. Again, there's that QR code if you still need it to get to the materials if you haven't downloaded them already. But without further ado, I think we should move into the first agenda item here. Go ahead and take to the next slide. And we'll bring Daniel up for you.
All right. Good afternoon. Hope everyone's having a great day today. And my name is Danny Garzon. I'm the Treasury Manager here at CalSTRS. And for today's presentation, I'll be going over some updates to our ACH account that is with US Bank. Back in November, I did a brief this audience on some changes that are upcoming. So here I'll be going more into depth about those changes. So next slide. So the agenda is pretty simple here. We're going through a little background and a little bit of updates to the conversion here. And the next two bullet points are really addressing a specific audience. So the second bullet point is the impact to those employers that originate payments to CalSTRS via ACH credit. And as again, a reminder, these are individuals who originate payments from their bank or their payment portal or their ERP system. The third bullet point here is for those ACH debit employers that originate their payments through our payment portal, but that also currently bank with Union Bank, because you all are also going to go through the conversion to US Bank. So I'll be addressing these items here. Next slide, please. Okay, so back in December of 2022, it was announced that US Bank Corp got a regulatory approval for the acquisition of Union Bank. So that's been in place since then. And throughout the past few months, we've been working with our banking partners on the transition over, which will be occurring actually later this month. So the weekend of Memorial Day weekend is when the conversion is going to happen, and the go live will be May 30th. But the good news is that on the second bullet point there, that the CalSTRS company ID is not changing with this bank acquisition. So that should be the same as it's always been. So it makes it a little bit less of a task to update any kind of information on your payee being CalSTRS. And then the third bullet point here, I'll be going a little bit more in details in this in the next couple of slides, but the middle of April, we begin a campaign effort to communicate to those impacted employers. So the first subset of that communication was to, again, the individuals who sent ACH payment to CalSTRS via credit. That's, again, if you originate payments from your banking portal or your ERP or your payment solution provider. And you at that point, you should have, in that communication, you should have received our new bank account number and our new routing number for the US bank account. Second bullet point there is for those employers, again, on ACH debit. These are, again, going back to the payment method. Those are if you use our PayCal website. And specifically, these are are targeted to employers that also bank with Union Bank that are going through the conversion over to US Bank. And then we were instructed in this communication that you would have to update some forms, some banking forms, so we can then make sure the payment goes satisfactory. Next slide, please. Okay, so this particular slide addresses, again, that audience that originates payment, what we call ACH credit, through your ERP or your payment portal, like your ERP system or your bank institution. And going back to that communication that was distributed back on April 14th, we instructed in that communication that you were to call us back to obtain the password to open a letter that contains our bank account and our routing information. So I put the phone numbers there. I believe the majority of participants in that audience have fulfilled that mandate of calling back and obtaining that new bank account information. We have a couple that still need to follow up on, but again, if you have not received an email instructing you on the ACH credit, feel free to call those numbers. And I'll also have an email address at the end of this presentation you can also reach out to. And that second bullet point there is kind of us addressing the point that if it takes time to update the records and the system in place, so we want to make sure everything gets taken care of on your side. So for the transition over to US Bank, we are requesting that if you make any payments to our new bank account number and routing number, please make payments after June 15th. Even though the conversion for Union Bank over to US Bank is during Memorial Day weekend, monies and everything will be routed behind the scenes if you get your information updated to CalSTRS. But again, to ensure there's no issues with your contribution payments for the beginning of the month, we are instructing you to make payments after June 15th. Next slide, please. And this last slide is really addressing the audience that use ACH debit. Again, a reminder, these are folks that use our PayCal website to fulfill payments. So again, a communication was distributed out on April 14th, impacting those specific members that we need a new electronic payment authorization agreement form that reflects your new US bank account. So again, these are individuals that are converting over from Union Bank over to US Bank. So we need to get your information on that particular form. And so we have instructed that folks complete the form and send it back to us by May 15th, so we can update our system behind the scenes to ensure everything goes, all the information gets uploaded correctly by June 1st. That's our deadline there. And then after May 26th, which is again the Memorial Day weekend, we are suggesting that please refrain from submitting ACH payments until you receive an email confirmation from us that your new bank account information has been updated. Okay. And then just a caveat there, individuals or employers who submit payment to CalSTRS via ACH debit and you do not bank with Union Bank, the implementation is taken care of behind the scenes and you are required no further action. So all the payments will be routed successfully. And right there at the bottom of the slide, I have an email address, epayments@calstrs.com, if you'd like to reach out to us via email to ask any questions, but I'll also pause if there's any questions at this point.
Danny, I see one hand is raised.
Yes.
Hi, I just wanted to confirm. So you put in your bullet after May 26th, please refrain from submitting ACH payments until but that's not having anything to do with the PayCal thing, right? So if we have PayCal, we're okay to submit a payment after the 26th?
This is specifically if you are banking with Union Bank and going through that conversion to US Bank. Once we receive, if you are that individual that's impacted by that conversion, once we receive your new electronic payment authorization form and we double check that everything's in place, and you will receive an email confirmation from us saying that you're good to go. So it's just saying that after May 26th, because that's Memorial Day weekend, we want to refrain from anybody submitting payments until you receive that email confirmation from us.
And when are you expecting to send out those email confirmations? Because we are one of the districts that have that, or the county offices that bank with Union Bank that are also in the conversion. So, I mean, I haven't received anything that I'm aware of. So, and that will impact how we submit our payments.
Sure. Jennifer, would you mind sharing what employer you're with?
Imperial County Office of Education.
Okay. I'll make sure we can go through our emails to make sure we didn't miss it. But we are working through all the email submissions. There's quite a bit of an audience, and we've gotten a few throughout the past couple of weeks, but we are working diligently through. But I'll make sure to notate your particular employer
Yeah,
to make
'cause
sure
we-
we get that confirmation over to you.
I think we sent it out like 2 weeks ago or something like that.
Okay, great. Thank you
you.
very much, Jennifer. Any other questions from the audience at this point?
Just in case folks are thinking about questions they may have, we just, we have included this presentation on the Employer Advisory Committee website landing page at calstrs.com. So again, the hyperlinks for the forms. And should you guys on this call need to share that with others in your offices, please feel free to download the PowerPoint presentation and push as needed. And then obviously e-payments at calstrs.com for any additional comments or questions you may have. And I don't see any other hands, Danny, so appreciate you coming back and providing everybody an update. And we will move on to our next agenda item.
Thank you.
Thank you. Again, we have been reporting on AB 1667. This was a piece of legislation that was signed into law last fall. And we have been working diligently across multiple business units at CalSTRS on the implementation. And so we are asking Samantha to come in and provide yet another update.
Hi, everyone. I'm Samantha Kessner with Employer Services. I'm the legislative analyst in that department. And then I was also the business lead on implementing AB 1667. So I'm just going to give you a quick update. You want to go to the next slide. So if you remember, the first two, the bill did four major things. So the first two were making changes to the audits process, and then also changes to the overpayment liability rules, which Nalini in the next segment will get into a little more of that specifically. But I wanted to talk to you guys about the other two things that the bill did, which was create a new advisory letter process, and then also create a requirement for CalSTRS to publish additional resources at least annually. So those two will take effect July 1st. And so I wanted to give you guys a little more information about those. Next slide, please. So for advisory letters, as I said, they're effective July 1st, 2023. We are working on a form that employers and union representatives will be able to fill out and submit to us to request an advisory letter. The advisory letter requests are for contract language that is currently in a contract or proposed to be included in a contract for specific compensation items that need that you'd like further clarification for CalSTRS as to whether they're reportable, and if they are reportable, how to best report them. So this doesn't replace any of the current communication avenues that every employer has with employer services. So the employer help representatives are still there to answer your reporting questions. And TAD, the training and development team, is still there to help with general TRL related questions. So this doesn't replace any of those channels for you guys. It just adds a third option if your district or county wants to ask a question, again, specifically about a contract compensation item included in a contract. So we're going to be posting additional information on calstrs.com by July 1st when it goes effective. As I said, there will be a new form that you'll fill out if you would like an advisory letter. And then once CalSTRS gets all the necessary information to answer the question, then we'll provide you with that advisory letter. And then as far as the resources go, those are also to be expected. The first ones summer of 2023. We wanted to kind of line it up with the beginning of the new next school year, just so there wasn't any confusion as to when the resources took effect. Training and development is working on a few reference guides that'll be posted. Again, we're hoping to post those things on calstrs.com somewhere, and we will definitely keep you posted as we get more information on exactly where to find those things. But we'll set up a sort of database for those resources so that employers have access to them and can easily find them. So that is all I really had for you guys about those. If anyone has any questions, I'm happy to answer them. And then the next slide has a bunch of FAQs that we currently have on our website. So if you have any questions about the bill or what it does, please check those out as well.
Any questions for Samantha? I don't see any raised hands, Sam.
All right. Well, thank you guys for your
Lucky
time.
you.
Yeah.
All right. So as Samantha mentioned, Nalini is here to talk about the overpayment part of 1667 and the invoicing process with you. Nalini?
Thank you. Hi, my name is Nalini Shankar, and I'm the Accounts Receivable Manager in the Financial Services Branch. I will be providing a brief overview of the billing process per Assembly Bill 1667 for overpayments that result from employer corrections or adjustments. Currently, we are targeting to send the first bill out in summer of 2023. It will include overpayments created from January 1st through March 31st of 2023. At this time, we anticipate the billing to be on a quarterly basis. How will invoicing work? Invoice will be sent to the county, and invoice will include all report units, those are the districts under each county at member level. To support the amount of invoice, all relevant information for county to distribute to districts and trace to original adjustments will be provided along with the invoice. We plan to send the invoice using the SEW portal, similar to the retirement incentive and the excess sick leave invoices that the districts receive today. Counties will be given 30 days to pay for the invoice. If CalSTRS does not receive a payment within 30 days, which is the due date on the invoice, regular interest will be added from the initial due date. Regular interest is approved by CalSTRS board each year, and the current rate is 7%. And how do you pay? The recommended form of payment is ACH, but check will be accepted too. We ask you to include invoice number on your ACH transaction, or if you pay with a check, to include the invoice number on the check as well. Instructions on how to make payment will be on the invoice. That's pretty much all I have for you today. Just had a brief overview of the billing process. If you have any questions, please go ahead and ask your questions. We'll try to answer them today. If we cannot get the answers to you today, we'll certainly get back to you.
All right. So it looks like we have a question from Anna. If we can get Anna's mic open.
Hello.
Hi,
Hello.
Anna.
Yes. So as far as the detail that will be provided, will it include the file identifier or like supplemental file number where the original transaction was sent that created the overpayment?
So we plan to provide an STM number or the correction date. And if there is a EBR form that resulted in an adjustment, to provide that information when the EBR form was submitted.
Okay. And as far as making the payments, we can use the same process that we used to pay contributions, like if we do the ACH, the Cal website.
Which website? I'm not quite familiar with that website.
The California, where we process all the contribution, the electronic file payments to CalSTRS.
The PayCal, is that what you're
Yes.
talking about, Anna?
Mhm.
I'm not quite sure about that. I'll probably have to find an answer for that. I'm not sure how the contribution payments are made. I'm pretty sure that it has to be through an ACH payment system. So I'm not quite clear if that will be available. I don't know if Jeannie is on board, if she can help me.
And I think Jeff Zimmer wanted to jump on. Can we, I don't know if he's set up as a panelist. Can we unmute Jeff's mic? There we go.
Thank you, Kim. Thank you, Nalini. And Anna, I appreciate the question. A follow up on some of the detail that we're hoping to provide in the invoice. So currently, CalSTRS staff is going through every receivable that it creates to determine what caused the receivable. Some of them are very complicated, and I shan't bore you with the details. And that level of detail may not be available on the invoice. We're working with our partners in financial services like Nalini about what we can include on that. Should you need further detail, I think we would be open to questions. If you had a question about a certain receivable, hey, can you tell me more about that? And maybe more of an inquiry basis, because to provide all the background about a particular receivable on the invoice, I think would be a lot of information and potentially be a little bit overwhelming and maybe not give you exactly what you need. So certainly with this first round of invoicing, we will put out, again, by source, by unit, by county, by district, by member, and what the receivable is. And then I've been doing a little bit of outreach with a number of employers that had some larger receivables, and I just wanted to do a little bit of conversation about that. So there will be a little bit of advance notice about some of these. So I'm hoping to kind of limit any surprises that come from this. So by giving both of those things, the detail on the invoice when it comes to source, district, and member, and then trying to give a little bit of foreknowledge about this, so you all aren't surprised. Hopefully, that gets to 85% of your questions, and the remaining questions, I think we will be here. We will be here to answer should you have additional questions about the detail about one receivable, and then we can answer that, because I think that makes for a little bit of a cleaner invoice. And again, it's a little bit better if you ask the questions of us and we can provide it to you, rather than assuming that you'll understand what the reason is for that adjustment. So that's what we'll do. But we're also, of course, making changes to the invoice as we do this longer. This is our first one. It's our first, I always say, this is our first time doing this. We're reacting to it as much as you are. So as we get better at this, we could potentially include more information if there's a consistent question that comes up, like the STM number. If that's something that we could provide every time, that's something we can look into. So I just want to set expectations for this first invoice and then see what kind of feedback we get to incorporate it into future invoices.
Okay, thank you.
Thanks, Anna. Thanks, Kim.
Thanks, Jeff. Don't go away. There might be more questions based on what you've said. I did see Vina, you had your hand up, and then you lowered it. So I just want to make sure before we go to Teresa, who would be next in the queue. Vina, yeah, there we go. Okay, so Vina, if we could get Vina's mic open and
Oh, I just wanted to, the way I'm listening, it looks like it will be just like P&I, penalties and interest, like the way we make the payment, we get the STM number and all that. Am I right?
I didn't quite hear it clearly.
yeah, Vina, can you speak up? We had a hard time hearing you.
I just wanted to confirm that it will be more or less like how you handle penalties and interest for all the districts, and you send the information to the county office.
Yes. Yeah, it will be more like that.
Okay, thank you. That's all.
Okay. So from Vina, we go to Teresa and then to Laura.
Good afternoon.
Hi, Teresa.
Hi, thank you. Back to Anna's question about making the payments through the government, state of California website. I believe it's called PayCal or PayGov or whatever they named it this time around. We are already set up with making all payments through that site. I'd prefer to have one location for CalSTRS payments than to have staff try and decide which place payments need to be made, if you will. So I know you have the debit credit directly to your bank now as well as an option, but we've never switched to that for the reasons I'm trying to explain. So if you could please investigate that more and see how you can open up those payments into the PayCal, that would be great.
I'll certainly take your question and I'll investigate it a little further with our cash unit and we'll get back with an answer.
Fantastic. Thank you.
Thank you.
Thanks, Teresa. Okay, so now Laura Hadley we can get Laura's mic open, that would be great.
Hello, good afternoon.
Hi, Laura.
Hi, I just wanted to add that we also use the PayCal for all of our payments, so I wouldn't even know how to go about doing another payment. So it'd be good if we could use that. Will these new invoices show up on the contribution account portal and the account management?
No, not at this time. It will not show on the contribution account portal. It will be available to the counties on the SEW portal.
The what? Oh, the SO?
The SO portal, yes.
So is there a different place we look for that on the SO portal?
So currently the districts receive retirement incentive and the excess sick leave invoices through SEW portal. So
Okay.
it will be similar to that.
Okay, so on the reports or the invoice tab?
Yes.
Okay, got it. Thank you so much.
Thank you.
Any other questions for Nalini, Rosanna?
Hi, thank you. I just wanted to confirm based off what Jeff was saying that in regards to the invoices we receive, it's going to have the source district member, and is it also going to have the service period so that we can isolate out what was addressed? And the only reason why I ask is because you are requiring payment within 30 days. We are having to turn around and invoice our districts associated, and oftentimes they have questions on us touching their money and taking their money to pay for it. So having that like from the get-go, basically when I do these journal entries, it's all in one place for them in regards to the member and the service period line would be very helpful. I highly doubt we would have to come back to you guys with questions if we already had that.
Thank you. I appreciate that feedback. That you're right, that the interaction between the county and the district certainly can take time, and that's again new. And whatever we can provide to make that conversation easier is good, and we will attempt to do that. I just don't want to overpromise the amount of detail we could provide, but if we could get the service period on there of the type of correction, we will definitely look into that.
Thank you.
Anyone else with questions for Nalini or Jeff on this process?
I mean, I think the feedback has really been beneficial today too. So appreciate those comments and thoughts, and would imagine that as folks think this process through and how it might work based on a district or a county and what that reporting structure is, there may be additional comments or feedback. So again, please feel free to reach out and share that with us either through the advisory box or through employer services. And with that, I'm not seeing any other hands. We can certainly come back to this, but we will move on to the ledge update. Is obviously an incredibly busy period of time right now for the legislature with the governor's May revision scheduled for Friday. I will turn it over to Joycelyn.
Good afternoon, everyone. Joycelyn Martinez-Wade, Director of Governmental Relations. Diana's right. All the bills are heading toward appropriations committees if they were able to make it out of their policy committees. And there is a deadline next Friday to move bills out of fiscal committees and onto the floor of the respective houses. So right now, several bills, hundreds of bills, I should say, are on suspense files, meaning they cost over a certain amount. Each committee has its own threshold in the Assembly and the Senate. And then those committees will be making decisions. Probably they'll have hearings on the 18th. That's usually a day before the deadline to decide which bills move off that either the Senate or the Assembly thinks are worthy of having that money spent on them. So I'll go to the next slide and give you an update on where each of these bills are at and try to fill you in on any details. This first slide has bills that our board has taken a position on. And actually, I'll pause there for a minute to let you know. I'm not sure, you'll see in the next slides that there are other bills that deal with CalSTRS, affect CalSTRS. I'm not sure if our board will be able to take a position on them this year. Their July board meeting is an offsite, and so generally we don't present bills at offsites, but it's possible. And then the September board meeting is actually taking place the last 2 days of session. So after things have already happened and there may not be all that helpful to take a position at that time. It just depends. Our chair and vice chair, I'll just remind you, are able to take positions on legislation if necessary because of that timing. So it is possible that they could go ahead and do that. If they do, we report out at the next board meeting what the position taken was and what that means. So again, starting here with bills, the board has taken a position on. So SB 252 on fossil fuel divestment is, we have an opposed position. That's on the suspense file in the Senate. And you'll notice most of these bills are starting in the Senate this year, which is interesting to me. SB 261, climate related financial risk reporting and requiring corporations to report on that, helping out our investments team. We have a support position that's on suspense. SB 327 is one of our sponsored bills on how far back a service retirement application can be backdated. The bill has recently been amended to limit that to 9 months. It was 6 months, but it's been changed to 9 months, working with some of our partners to make that line up more with what CalPERS allows when it's within 9 months of terminating service. That bill is also on the suspense file. There's some small costs to update our system, but it's above the threshold. So that's where it's at right now. SB 885, we're also sponsoring that as a housekeeping bill. We have one provision. It also affects CalPERS, 37 counties, and the judges, one of the judges' retirement systems. I think it's JERS too. For our piece, it has to do with federal background checks for our employees and those with tentative offers on the table who are seeking a job here, not applicants. But the FBI is who we go through Cal DOJ, but the FBI does the background checks, and they've changed what they need to see in the statutes to allow them to provide that background check. So we're getting our statutes updated to allow us to continue to do this. In order to protect the money in the fund and personally identifiable information we have in the system here. That bill's been on consent all along and actually may be taken up on the Senate floor tomorrow on consent. So that's exciting. SGR 1 is a resolution supporting the repeal of the GPO and the WEP Social Security benefit offsets. We have a support position on that, and that's already in the Assembly on third reading, so almost through the whole process. HR 82 is not a Senate bill. It's a House resolution in Congress. It's a little bit different. This is the bill that actually would repeal the GPO and the WEP, so the board has a support position on that as well. I'll stop here to see if there's any questions on these. I think from an employer perspective, there's not too much impact, but just in case, stop here. Then we can go to the next slide. And these are bills that we don't have a position on, but that affect us. SB 300 is one we've been keeping an eye on. It was recently amended, moving out of policy committee to provide a lot more meat. It had to do with the additional fiscal analysis being done of bills, and it was first affecting just CalPERS. Now it's any public retirement system. It's focused on divestment bills and having an analysis done by the Legislative Analyst's Office of those fiscal impacts before the bills are heard in policy committee. Pension systems may help with that analysis that the LAO is doing. That's in the bill. Essentially, we provide administrative costs and exposure impact for divestment bills already. So there's not too much effect to CalSTRS, but we are keeping an eye on it. Just to remind you, it's hard to tell what a divestment bill would do to returns, and therefore it's hard to say what the impact will be to our funded status or contribution rates. There can be an impact if we're not able to find equal or better investments to get the same return. And so I mention that because that's something that the bill asks for from the LAO. So that's always something that it depends. And so we provide, if this happened, then this is what it could look like. We provide that information. And it also notes administrative costs to the general fund. Now we do produce administrative costs to divestment bills. They largely are transaction costs. So as you know, if you have your own investment accounts or defined contribution accounts, if you make changes to what you're invested in, they charge you a percentage. And so transaction costs can be quite expensive when you're moving money around. And those aren't general fund costs. The bill refers to that. Those come out of the teacher's retirement fund. So again, keeping an eye on SB 300. That is, I think, up in appropriations on Monday. And I think we'll see it go to the suspense file. SB 432, I think, will also be up on Monday. This is a cleanup bill to AB 1667 that we were talking about. There were some provisions that the governor's office wanted to make sure to clean up that were in line with keeping with our tax qualified status at the federal level, some clarifications that they wanted to see. And so that's what that bill's focused on. I believe there'll be amendments coming soon that will further that effort. And I think we'll see this up on, like I said, Monday as well in committee, and there's no real fiscal impact to it since it's just cleanup. So it may move through committee quickly next week. SB 637, I will mention to you, and it's a 2-year bill. So there's nothing really to do about it now. It is quite wide ranging for us. It restricts state agencies, including CalSTRS, from doing business with financial institutions that essentially are doing business with firearms manufacturers. It's a different approach to kind of having us get out of working with folks. So it's not a divestment bill in a traditional sense, but we contract with many different financial institutions to do our investment work. So this would be a pretty big impact to us, as well as probably lots of other state departments. So I think that became clear, and this is now a 2-year bill. So we'll be keeping an eye on it to see what happens next year. SB 660 is interesting. I don't think it would actually affect the school pool too much either. On the CalPERS side, I don't know if they mentioned this bill, but there are lots of contract agencies out there. It has to do with creating this panel to look at reciprocity costs, where there may be a small agency that contracts with CalPERS that has people start out at lower final compensations. Lower compensation, not final compensation. They move to larger districts, let's say, end up earning more money. That ends up being a high final compensation, but they get a benefit from the first smaller district they may have worked for. And the benefit has to be paid out at that amount. So there can be a cost that happens with reciprocity in that fashion. So I think the senator here is looking for more information on that. So we are on this panel. We, being CalSTRS, is supposed to appoint a board member, one of our board members, to it, but we don't really have those impacts from reciprocity or concurrent retirement. We do see concurrent retirement, but they're not high numbers. And again, if somebody moves from district to district, you all know you all have the same contribution rates. And so keep an eye on that one. Then SB 765 is probably one that's more in depth and could affect you if you see retirees coming back to work. It's about the teacher shortage, and it does provide some other provisions related to grants when people are coming into the teaching workforce. But the pieces that we have that affect us are on our post-retirement annual earnings limit, and then the separation from service requirement. What's in the bill right now for the separation from service requirement is a change to the process for getting an exemption, existing exemption, and it removes the school board approval. We've heard anecdotally that that's kind of the most difficult part of getting that exemption. It's obviously school boards aren't meeting every day. So if there's a critical need, maybe sometimes it can get hard to get on an agenda and get that voted on. So that's what the bill does right now for that. On the annual earnings limit side, it adds an exemption, and it has some restrictions around that, some match exemptions that we had several years ago. So that would provide, if the school district can certify, or the employer can certify that those requirements are met, then that person can be exempt from the approximately $50,000 earnings limit. And so what I do know is there's a lot of conversations, a lot of different people involved in this bill, trying to figure out what the best way to approach this is. I want to mention from our perspective is the pension system. There are potential concerns with this policy approach because there's a sense of double dipping when people can return to work and earn both a pension and then a paycheck from a public entity. And so that's something that really PEPRA put into place, that separation from service requirement for everybody above normal retirement age. It expanded it. And one of the big reasons, we got included in PEPRA is because of double dipping and wanting to see those practices change. And that's part of the implication. So that's one thing we have to worry about. And another is that when retirees come back to work, they of course aren't paying contributions. And if it becomes a trend where a lot of people are coming back in retirement, or if members are retiring earlier, so benefits are paid out longer, and then they return with the anticipation of returning to work in retirement, that could eventually, if it compounds, have an impact on our funding. So it's something we're keeping a close eye on and making sure that there are any guardrails that are placed on any exemptions, that's something we can administer feasibly in order to make sure that we're doing these, that we are handling these interactions on a potential exemption in a timely manner. So that is up on Monday as well. And I guess I should have said SB 660 is on the suspense file. I'm sorry, going back to that one, but SB 765 will be heard on Monday and Senate approves. Any questions on those? Excellent. Next slide. Okay, regulations update. So on the first one, CalSTRS 2% at 62 compensation paid each pay period, making sure that we have clear guidance on what can be included for 2 at 62 members if they happen to have a pay start before the first actual pay period of their school year. So that's an issue we've been talking about, and we're slated to notice these regulations in July. So keep an eye out. Email regulations@calstrs.com if you want to be on lists that get updates on our regulations. It will be on our website. There will be a 45+ day written comment period where you can submit written comments. And the timing of that is to coincide with the September board meeting at the end of session, where there'll be a public hearing where folks can come and give verbal comments. So plan for that if you want to look at those and make any comments on them. And the other two, we've talked to you about our proposals for the updates to the penalties and interest regulations to update them for situations that have occurred and come about with all of the newer legislation, not even newer legislation at this point in time, but PEPRA and the funding plan. And now we have AB 1667. So if we need updates, this is what we're looking at to be able to make sure these are in line with kind of what our world is like now, as opposed to when the P&I regs first came into place. We're still working internally on what the regulations are going to encompass and are looking forward to sharing those with folks to get feedback in the pre-rulemaking process. And that's basically where we're at with AB 1667, any regulations related to that bill as well. I can tell you they're mostly related to the audits and employer audits and appeal process. You'll know that some of that is laid out in our regulations now, so they essentially need to be updated to be in line with what AB 1667 put in the statute. So those are our regs. We'll be back with more detailed updates on the first and second two there. Questions on those? Okay, next slide. And this is on implementation on last year's legislation. And I am off the hook on the first bullet. So thank you to Samantha and Jeff and Nalini. And on SB 868, this is an increase to supplemental benefit maintenance account benefits inflation protection for members who retired prior to 1999. So we're on track with updating our system for that. The benefits would start to accrue July 1, and we're looking for them to be paid out in the first check that the SBMA would be going out in, I think it's October. So I think that's my last slide on legislation. So any questions? Great. And I have the next piece too, so we can go to the next slide on the state budget. And I think Diane gave the big update. So this is great. You get to hear it twice, but May Revise is slated to come out on Friday. So we'll be keeping an eye on that. We are not anticipating any supplemental contributions for either the state or employers at this point in time. We haven't heard anything about that. What we do always see in the May Revise is the true up for any late changes to payroll that affect the 21-22 school year, because then that is used for the state to determine how much they're going to contribute for 23-24. So we've got that data into them, and then they'll make that part of the May Revise. And subcommittees will be looking to meet on those items in the next week next month or so, I should say. The legislature looks to pass the budget, of course, by June 15th, and the governor to sign by July 1. So that's the brief update on the budget. And I can hand it over to Diane to do the next update.
Thanks, Joycelyn. We wanted to bring everyone's attention at the May board meeting. Our actuarial team provides a evaluation on the different accounts within the pension fund. And as part of that conversation and dialogue, the board has some rate setting approval that they can do. So we did want to just bring to everyone's attention that we do expect that the employer rate for next school year and fiscal year, as well as into the immediate future, we expect that employer contribution rate is going to maintain and stay at 19.1. Again, that's for the immediate foreseeable future. Unclear if there may be drastic situations that could change that. None of that would be expected or anticipated. So again, I think for planning and budgeting purposes, folks can count on a 19.1 going forward. The state contribution rate, and this was already included in the governor's January budget. Again, the May revision, we don't expect this to be changed or adjusted, but the state contribution rate, they've already planned for a 8.328%. And then there's a 2.5% rate that is specific contributions from the state that is specific to the supplemental benefit maintenance account. That's to help retirees, provide them some inflation protection. And so that is an additional 2.5% above this 8.328. But again, we just wanted to share this information with folks, again, for transparency and again, for budgeting assistance should that be helpful or necessary. So I think that is it for that. And I think we can move to training. Kim, should I turn this one over to you?
It is not mine. But we do have Jennifer Dobbs here from Employer Services Training, and she is going to be the presenter for this particular section. Jennifer, it's all yours.
Thank you for the introduction, Kim. So as Kim mentioned, I am Jennifer Dobbs. I'm here from Training Services to share some training updates that we have coming up in the next fiscal year. So if we can move to the next slide, please. So we have a big change coming with our online resources. So hopefully everybody's familiar with PALMS, that Pension Administration Learning Management System. We're switching over to the Employer Learning Center, and that change is going to be effective on June 1st. What that looks like for you, so all of your account information is going to transition, so you won't have to create a new account, anything like that. We're just going to change the web page and where that information is hosted. The one thing that we will lose in that transition is the CBT completion and your scores. To me, that's just an opportunity. You can go back, take those knowledge checks and, bump up that score a little bit. So not a big deal there. If we can move to the next slide. So we do have some resources. So right now on the employer support portal, these resources exist for PALMS, but we have these resources for the Employer Learning Center as well. So you have a job aid that walks you through setting up an Employer Learning Center account if you need to, as well as a job aid about navigating the CBTs. We can move to our next slide, please. All right, so logistically, this is what we're going to look at over the next month or so. So as I mentioned, PALMS access is ending. So that is going to end officially on May 26th. So later on this month, we're shutting down PALMS. May 26th is on a Friday. So we're shutting it down on a Friday, and then the Employer Learning Center is going to be accessible starting June 1st of 2023. So that's the Wednesday following. So we do have a slight gap there. I do want to point out that during that gap that the Employer Learning Center is not accessible. You do still have all of those really great resources on the employer support portal that you can access. And then you can also access, the training team by emailing us at employertraining@calstrs.com, which we'll have at the end. So certainly don't feel like that few days that you don't have access to CBTs, that you don't still have access to resources or your trainers if you need any assistance. And then very important one here. So you're going to want to update your favorites. So right now, when you go to PALMS, it's palms.calstrs.com. So we're changing that to training.calstrs.com. So hopefully still very easy to remember, but you'll want to make sure that you update your favorites come June 1st so that you have that new page saved. If we can move to our next slide, please. So this is going to, if you're familiar with Palms, this all should look super, super familiar. This is going to be your landing page at the Employer Learning Center. It looks exactly the same as what you're used to seeing in Palms. The only change here is that Employer Learning Center banner there. And then I just want to continue driving home that point that we're moving to training.calstrs.com. And then if we can go to our next slide. Again, this was just to highlight, this is our course categories. This looks just like it does in Palms. So you still have all of those resources for your teachers' retirement law training materials. So it's like your creditable service, DB membership, creditable compensation. So all of the CBTs and the materials that go along with them, your NUSO training, as well as employer onboarding resources. And then one last time, I'll just throw out there, training.calstrs.com. And then you will see some changes. That's a good segue into our next update. You'll see some changes on the Employer Learning Center as we move forward, because we're getting ready to kind of repackage some of our materials as well as share some new materials with you. If we move to our next slide, I actually have Mia Tonoya Hill as our training manager, and she's here to share what's coming up in the next fiscal year. So not only do we have that move from Palms to the Employer Learning Center, but we have a lot of new materials and new resources that we're working on as well. Mia, if you're here, if you'd like to share, you are welcome to chime in. There you are.
Absolutely. Thank you so much, Jennifer, for that introduction. I do just want to take a moment of your time. It is just one slide here for you today to kind of tease what's coming up in the next fiscal year. So as many of you are familiar, we will be releasing an updated training calendar. We usually do that right before or right at the beginning of the next fiscal year. So think June, July area. We are going to make some adjustments to the way we release training information. We want to make sure that we're giving you enough time to register and plan to attend an event, but not too much time that we can't better adjust or add different trainings as the year progresses. So we're going to be releasing our training information in 2 releases. So at the beginning of the fiscal year and then halfway through the fiscal year around December, a little bit after the rest of that fiscal year. So we're going to release it in 2 sets. We're also going to be looking at adjusting the way we offer some training to really better align with some of the things that the different report units and you as the county offices of education are kind of looking to see with training. So maybe some more employer specific trainings throughout next fiscal year. We'll be releasing more information. We're still reviewing and kind of creating some of those different resources. We are looking at also releasing an employer reporting CBT series. This course is going to be a great introduction, especially if you have new staff or staff who are wanting to refresh themselves on the different employer reporting responsibilities. So the different things that the employers are responsible for, and the ways that they can complete certain tasks. So we know we're responsible for, let's say, reporting unused sick leave. So what are those tasks associated? And then where are better references if I want to dive a little bit deeper into that? So really kind of bolstering some of the materials that we already have available to employers. We also are working on a form series. So this is something that we've heard as feedback from employers in the past, something more specific to the forms that we have, more guided, more activities that you're able to practice through. That won't be coming out at the beginning of the fiscal year. That's going to take us a little bit more time to finish some of those items, but we wanted to let you know some of the things that we're working towards and that we're working on. If you have any questions about our training materials that we have out now, or maybe some questions about upcoming trainings, things like that, please feel free to contact employertraining@calstrs.com. We're happy to answer your questions, certainly to the best of our abilities. Thank you.
All right, Kim, that was all we had. I don't know if you want to open up for questions for us before we go to open forum. We're happy to take questions. If not, that's all we have for you today.
It looks like we do have a question for you guys from Michaela. If we can get Michaela's mic open, that would be great.
Hi, I was wondering what PALMS stands for. I'm not familiar with.
That's a great question. So PALMS is the Pension Administration Learning Management System. So we like to think we're taking some of that mouthful away too. We're moving to the Employer Learning Center. So Pension Administration Learning Management System is what PALM stood for.
Thank you.
No problem.
Anyone else with questions for our training staff? Nancy?
For our credentials that we used to then log into PALMS with the new site, employer training or employer, yeah. Does our credential get transferred over, or do we have to reset up?
That's correct. So your account information is going to transfer over. You won't have to set up a new account. All of that will transfer over. The only thing that we're losing is that CBT completion. So it won't tell you anymore if you've already taken creditable comp or if you took that knowledge check, but all of your account information will be there.
Okay. Now, I know we have an administrator within our organization to assign new users. That process is still the same?
So that's not part of the Employer Learning Center. I believe we don't assign roles like that. I believe that could be possibly so. Are you thinking of so perhaps?
I have thought, is it the?
I might chime in. You might be thinking also of
ERE?
ERE, yes. So the PALMS accounts and Employer Learning Center accounts are not attached to any other CalSTRS accounts that you may have. These are separate accounts from those.
Oh,
thank you, yeah.
Okay, all right, thank you.
Any other questions?
And again, I think where we started this conversation, just again, another reminder, I know we've had some folks that have joined mid-meeting, have maybe stepped out mid-meeting, but all of these presentations are available at calstrs.com under the Employer Advisory Committee. So again, to the extent that this is beneficial information, hyperlinks, email addresses, all of that information is available and downloadable for more wider, broader sharing with your peers.
Great. Okay. So I believe, thank you, Mia. Thank you, Jennifer. We have moved into our open forum part of the agenda. So this is for really anything that was on the agenda that you still had questions about or wanted to bring back someone to ask a question. And so I will turn it over to our group here to see if we have any raised hands or any questions. Do we have any questions in the advisory committee email box? I haven't seen any come through, so.
I have not either.
Okay, and I don't see any raised hands. Going once, going twice. Fantastic. That means we answered everybody's questions today, Diane.
Yay!
All right. So we are going to say thank you again for joining us and for coming to our quarterly EAC meeting and adjusting the time with us this time. And the plan is to keep this time slot so you can plan for this in the future as we move into the next few quarters. So I hope everybody has a good afternoon. And if you think of questions later, feel free to use that advisory committee box and or reach out to your employer help folks, and we can definitely help you with anything that you might need to ask. So have a great afternoon, everyone.
Thanks again, everybody.